Hello traders, you are welcome to Forex Trading Simplified. And in this video, I am going to explain to you with step-by-step guide on how to navigate the Forex market. Now, you need to understand that as a beginner trader, this concept is very important in your trading journey. You don't have to skip it because this sets as a foundation in your trading journey. In the advanced level, you are going to need this concept as a trader. So sit down and have a heart to learn and watch this video.
All right, so this is market structure. This is how the market actually moves. As a beginner trader, you need to understand that the market move in three different phases. Number one is during an uptrend. That is when the market is buying upward. And number two is during consolidation. During consolidation, this is when the market doesn't have a direction. All right. Then the third one is during the downtrend. Now, I'm going to explain the uptrend. Now, during an uptrend market, the market move in the series of higher high and higher low. So this HH is higher high, this HL is higher low. All right. So the market move in this structure higher high and higher low because the market doesn't move in a straight line. Okay. So the market will buy. At some point, sellers will override the buyers and they will retrace, they will sell the market a little bit. Then at a point in time, the buyers will still take over the market and then they are going to buy the market upward, creating another higher high. Then at a point in time, the sellers will also come into the market and reverse the market a little bit. Then the buyers are going to take in control and buy the market upward, creating another higher high. So during an uptrend, the market moves in series of higher high, higher low, higher high, higher low, higher high, higher low, and so on and so forth. Then during the downtrend markets, when the market is selling, the market move in the series of lower low, lower high, lower low, lower high, lower low, lower high. Now, this actually means that when the market begins to sell downward, the market will not just be selling downward in a straight line. So at a point in time, when the sellers sell the market down, the buyers will overthrow the sellers and reverse the market a little bit. Thereby, the sellers will still have the more power at hand to push the market downward. So that is when we'll have a lower low, lower high. Now, when the market sell down, you know that this is sellers. Okay? And when the market reverse, creating a lower high, at a point in time, sellers take control of the market again and sell the market downward. So in simple term, during downtrend market or when the market is actually selling, the market move in the series of lower low, lower high, lower low, lower high, lower low, lower high, and so on and so forth. Now we have the consolidation markets. We also call it the ranging market. Now, during the consolidation market, there is no clear bias of the market to buy or to sell because the market, when the market begins to consolidate, it doesn't have a clear direction if the market is actually wants to buy or wants to sell. So there is need that when we have a consolidation market, when we see a consolidation market in the chart, we don't place a trade. We hold on, we look at what the price is going to do. Maybe the price is going to go up or go down before we take our conferences to either buy or sell. Now, another thing you need to understand about uptrend markets is that when the market begins to buy in higher high and higher low, higher high and higher low, what actually happen is that When the market buys from here down to this place and retraces a little bit, the moment the buyers take control of the market and push price above this recent high, what actually happens there simply means break of structure. That is where we have the BOS. That is the meaning of break of structure, BOS. Then at a point in time when the buyers attain this level, the sellers are going to overthrow the buyers, creating an higher low. And at a point in time, because the power of the buyers are so much in the market, they are going to take over the market and push the price up, breaking past the recent high, creating another break of structure, and so on and so forth. So when the market is in an uptrend, this is what actually happen. You have a higher high, higher low. The moment the market break through recent high, it means that there is a break of structure. And as you can see that there are break of structure right here. And then during downtrend markets, we also have break of structure. All right. So when the market starts to sell from up down here, we have lower low, lower high. Now, if the market fail to continue going up now, because the market is in downtrend, the sellers are going to take control of the market here and push the price down, breaking past the recent lower low, creating a break of structure. All right. So when the market push down here, creating another lower low, the market will retrace back a little bit, and at a point in time, sellers is going to take control of the market and break through the recent low right here. So and so on and so forth. This is how the market actually moves. Now I'm going to go on to the chart now and show you live examples of how the market actually moves. All right, so the pairs that we are trading, we are testing right here is GBP JPY. All right, this is GBP JPY. Now don't worry, you are going to understand this. I'm going to explain step by step how you are going to understand this. So right now, the time frame of this market is in daily time frame, which is 24 hours. And I explained in the previous video, because I have choose daily time frame, it means that each red and green candle, as you can see on the screen right here, it means each candles form for 24 hours, because this is a daily candle. All right. So now if I switch down to 4 hours, all right, if I switch down to 4 hours, so the example of this is an example of uptrend. All right, this is an example of uptrend market, because the market was actually buying up like this. All right, the market was actually buying up in this series. The market was going up. So because we have this uptrend market, we are going to have some examples of break of structure. So right now I'm going to explain how to spot out your break of structure. All right, so from down here, the market was actually selling down, okay, but the moment the market reached this level, the market was unable to sell downward again. All right, the market was unable to sell downward. So right now the market moved up right here, so it means that from here we have our break of structure. Okay, so we draw a line here, then have our break of structure. Can you see now? So this is our break of structure, because the market has created a new higher high. All right, now let us continue to spot our break of structure. Then we also have another break of structure right here. Okay, we also have another break of structure right here. Also, the market goes up, it comes down a little bit. Okay, So we can call this another break of structure. Okay, so this is another break of structure. So this is actually very important that you know how to spot out your market structure, either in an uptrend or in a downtrend. So now I'm going to check if we can see a selling market to spot out our higher lower low and lower highs. All right. Okay, so this is an example of um downtrend, because as you can see that from this point the market was actually buying. Okay, so the market is actually selling from this point right here down here, because the moment we even have more examples right there. Okay, we have more examples, so let me just use this one to explain to you now. So now at a point in time we see that the market was actually buying up right there up to this stage. Okay, but at a point in time we can also see that the market after the market reverses from here, the market refuses to go up. Okay, so now the market now continue to sell downward. So now let us spot out our break of structure, because this is what the video is all about. So now to spot out our break of structure, so now we have the market comes down here, it's create an higher high here. So now this is the point at which the market refuses to go up. All right, so this is our break of structure. Right, that is one break of structure. Now we also have another small break of structure right here. Okay, we have another break of structure, then we also have another break of structure here. Okay, and so on and so forth. You can see that we have another break of structure right here. We have another break of structure right here. And at a point in time, you see that the moment the market comes down here, the market refuses to go. Okay, hold on, because this is a downtrend market, right? So this is a downtrend market. So it means that we have a series of let me write it here, lower high. Okay, that is our lower high. Then we also have lower low. Okay, lower low. All right, we also have our lower high here. Okay, lower high. Then we have our lower low right here. Okay, we have our lower low right here. So this is how you spot. It doesn't necessary that you write all these abbreviations, but at least you must be able to spot out your break of structure, and having in your mind that the market, when the market is selling, the market is moving in a phases of lower low, lower high, lower low. Okay, lower high. All right, this is a lower high right there. Okay, so we have another lower low here, have another lower low. So this is another lower low. Then we have another lower high here. Okay, so we have another lower low right here. But now you can see now that the market refuses to create a new lower high. And even if we assume that this is our lower high, okay, you see that the next thing that we expect the market to do right here is that it creates another lower low. But the market refuses to create a new lower low, simply because the buyers has overthrown the sellers right here. Okay, so at this point in time we can see that the bias of the market, the direction of the market has actually changed from selling to buying. Okay, so let us create our break of structure. Okay, for our higher highs and higher low. Okay, so now we have higher high. Okay, then we have our higher low. Okay, we have our higher high here, higher high here, then we have our higher low here. Can you see how I am actually spotting it? So we have our higher high here, okay, then we have another higher low here, then we have another higher high here, we have another higher low here. Now you can see that the market was selling here, and at the point in time the market was buying. Now because, okay, let us say now if you are going to have a new higher high, we expect that after we have this higher low, the market is supposed to break through this structure. Okay, because as in the example I showed you right here, you can see that when we are in an uptrend, if the market is going to create a new higher high, it's going to break through the recent higher highs, right? So, and that is what you are actually seeing in the market now. Now, since market has created a higher low here, we expect that the market should break through this recent high, but the market refuses to break through this recent high. Then the market turns to selling again. All right, so this is how you spot out your break of structure. Okay, so let me just add break of structure to our uptrend here, okay, so that you can understand. So this is our break of structure here. This is another break of structure. Okay, this is another break of structure. Then this is another break of structure. All right, so this is how to you see, you need to understand this market structure. And I want to believe that because I have explained the downtrend and the uptrend, and I have spot out our higher low and higher high during an uptrend, and I have spot out our lower highs and lower low during the downtrend. Now let me show you consolidation markets. All right, so let me show you the consolidation markets. All right, that's the network, sorry about that. So I'm going to show you the consolidation markets. All right, so this is how we actually spot out consolidation, and this is a perfect example. All right, this is a perfect example. So now I'm going to draw a box right here. Okay, I'm going to draw a box right here. Now can you see that during these ranges, during this range, all right, hold on. Okay, so now can you see that during this range, the market refuses to go either up or down, but the market was actually ranging in a box. All right, so the reason why we don't usually trade ranging markets is because we don't know where the market is actually going to. And when you see a ranging market like this, you don't trade the market. You don't trade it. And the reason why is because if you trade the ranging market, for example, maybe during when the market gets right there, and you assume that when you see this green candle, you think that the market is actually going to go up. If you place a buy trade right there and you set your stop loss right there, okay, let me just take the tools. Okay, so if you assume that the trade was going in an uptrend right here, and you target your stop loss to this point, and okay, so and then you think that the market is going to come up here. So now can you see now that the moment you enter the market from here, the market was actually going up, but at a point in time the sellers took over the market and go through your stop loss. All right, so now you can see that you have actually lose a lot of money. Now if you don't understand these tools, don't worry about that. I'm still going to explain more, but what I'm actually trying to explain to you right now is that during ranging markets, you don't trade the ranging markets, you don't trade it. So This is going to be the end of this lesson, and I want to believe that you now understand how to spot your break of structure during uptrend and downtrend in the market. If you like this video, please ensure you follow more so that you can get updates when new videos is out. Thank you.